Hey Bob, with the federal rate increase, if I'm selling a property now, how is that going to affect my sale?
Well, Jason, there's always a correlation similar to what you see in the bond market. They always say as prices go up, interest rates go down. As interest rates go up, prices go down. So might be able to use the same analogy in the housing market. As the interest rates start to rise, there may be a little downward pressure on sellers not getting the higher prices that they expected. Although honestly, this interest rate hike has been talked about for the last 2 or 3 years, never really happened. So there's also another argument that this interest rate hike has already been factored into the market. Also, add to that the fact that real estate is now pretty hot after the 2007 collapse. So you still have a pretty good and hot housing market. I don't expect the small increase in interest rates to really depress sellers' expectations. It might slow it down a little, might be a little more gradual appreciation or upward price mobility, but I really don't see any dramatic change in terms of prices. But once again, in the back of a seller's mind, the seller may be thinking, hey, I better decide and take the best offer I have at the moment uh, rather than wait it out hoping for my house to appreciate even further with this outside pressure of maybe the interest rates will also continue to rise, and that may have a depressing effect on your sale price. So it's a little bit of a mixed bag. Don't think it'll have much of a impact right now, but psychologically a few sellers may be saying, hey, maybe I've come to the end of my run. I probably should take the best offer I can get and get out of this market and do something else with my money.